Welcome back to another episode of the Easy Button Real Estate Podcast with your host, Cole Ruud-Johnson and Mr. Tucker Merrihew. Tell you guys, we're going to do our normal Tucker and myself show, and what it's been clear to us that you guys have liked the most is when we deep dive into real questions that we're getting from our clients, people around the country that are doing deals at different stages. So we'll dive into that. Before we do, Tucker, it's been 2 weeks since we recorded a episode, What's Going On down in Naples, as we kind of head into late summer, early fall.
It's sweaty season. No doubt about that.
Is it the hottest time of the year there right now?
Yeah, this month is the hottest. If you see people sweating in other parts of the country, you're kind of like, what's wrong with you? But down here, it's just kind of normal. Everybody sweats if you move it all outside right now. But other than that, kids went back to school, which is fantastic. And we actually just finished up a backyard renovation project for ourselves. So this past weekend, we had kind of a kickoff pool party, and we got like this cabana thing that we built, and outdoor barbecue area with the barbecue and Blackstone and all kinds of cool stuff. So it's pretty nice. We got it was hot, but that's why you got a pool. So you get the pool when you start sweating, and you just kind of hang out there with your friends, neighbors, and whatnot. So it's been a good couple of weeks.
I saw your Facebook post this week or last week about the highest build you're doing. Is that moving? Like, where is that at now in the process?
Yeah, we should have our building permit here within a week. So there's a lot of front end work that has to be done to build a new house here as compared to other places that I've built. And so like today, for example, one of the last conditions they need is they want a list of every subcontractor that's going to work on this house as I build it, which is virtually impossible to provide. But so somebody came up with that as a good idea, and then it creates a ton of time on the front end for somebody like me to gather up all this information when you know damn well that most of the people you list on that list probably aren't going to work out, whether they have a high bid or there's scheduling conflicts or they disappear. Who knows, right?
So even if someone just comes out to do a bid, you have to list them?
Yeah, you have to literally pick every subcontractor before you hire them and before you get your building permit, which of course, most of them you haven't even hired yet. So it's a really dumb process, but I don't make the rules, so I got to abide by them. So as soon as we're done recording here today, I got to continue, putting this huge list together and get it over to the city of Naples so that they can say, okay, this looks like a complete application. And then, probably 2 months from now, I'll change 80% of those to somebody else. So.
And then what if you already have something, like what if you add someone later? Like what if you're further into the project, then there's someone you didn't know about that you got referred to that you wanted to bring on for a certain part of the project?
So it's a little bit easier for City of Naples to add people, change them out. Collier County, they make you send this certified letter to the contractor or subcontractor you originally listed on the application that basically says, sorry, loser, you got fired. You need to acknowledge that you got fired before the job even started and approve it so that we can put another guy's name on the application. So there's some really wacky stuff. And I get they're trying to like track who's working on each house, but to require it at this point at that level, whoever made that up, they need a little bit of help understanding how construction really works.
It's like the classic example of people that have never been in the business making the rules for it. We're like, on paper, like I can see if you've never been in real estate, you look at that, go, yeah, that could be a good idea because like we know where everyone is on each project. But if you never ran a project, it's not conducive to the business itself at all.
Yeah, it's a perfect world idea, and construction is the absolute opposite of perfect world most of the time. So yeah, pain in the butt, but we're close. We're really close. I'm excited about this plan. I think the market's starting to improve here, with the whispers of what's been going on with, interest rates. They're expecting a certain number of cuts now. Whether it happens or not, who knows? But just the expectation of that, I think, has gotten more people interested in buying houses. I know back in the Pacific Northwest, one of the both of the realtors that I used to host a podcast with there, they said that their business has started to boom again. Comparatively to what it has been for the last year and a half or so. So I think people are starting to sniff around again. I think the market it's not turning yet, but it's the beginning stages of people kind of re-entering, at least being interested in real estate again, which is good.
Yeah. I'm seeing that too. Obviously I was actually talking to someone about this yesterday, that all I feel like consumers really care about when they're going to buy a house is like what's on the news about interest rates. Like they don't even realize that a lot of it's already been priced in, or they just look at, oh, CNN has us another rate drop. Let's, now they get FOMO so quick. I think it's hilarious. But cool. Well, that's I think a cool intro to the show. I think we had a show a couple weeks ago about how right now is a tricky time to massively change what you're doing. Like if you're a wholesaler and you go to try to do a super high end flip right now, pretty tricky. Same for development, everything else across the board. And I think the reason for that, what I found and how I've thought about it is because, when you don't have the market to save you, you have to be better at operations. And like Tucker's saying, I feel like every single part of the country, every market has its own little hoops you have to jump through. So I think that was a good example of that. But one of the questions that came up this week on the community call, that's where we spend a lot of this time on these podcasts, is I get a lot. It's financially about reinvesting into your business. And the question was from one of our clients who's in San Francisco, and he was asking, hey, how much of if I do $50,000 in a month, how much should I be pulling out versus reinvesting in my company? And I think that word reinvesting is oftentimes used by people a lot of times where their company's not making money. And so they just tell people they're reinvesting in the business instead of, their company has some profit, but they decide to invest more in marketing. So if someone, this guy, for example, he's about a year and a half in, he's still working his W-2 and doing deals with his wife. They're doing flips, doing wholesale deals, referring deals to realtors. What would you tell someone like that in regards to how to think about taking money out versus rolling it forward in their situation?
Ooh, that's a good question. I guess I'll preface it with saying it's probably different for everybody, but I'm a big advocate of trying to establish as much runway as you can for yourself, while at the same time, allowing your business to grow. Some people are just burn the ships. Let's reinvest every dollar, whatever that means, right? Usually it's like, let's hire more people, let's spend a lot more, let's really ramp up marketing. Maybe we add a couple different channels, new channels to it or something, right? That you're spending this additional money on. And I'm okay with all of that. I guess the reason why most people fail in business is that they run out of runway. And when I say runway, I mean cash money in the bank that pays bills, whether it be, personally for the business, whatever. And so the more runway you can build for yourself before you start really reinvesting a lot of the profits back into the business to grow, the better, in my opinion. 50 grand, if it made 50 grand, I don't know what his, existing overhead is. Let's say it's like 15 grand. Let's say that was his current overhead, right? With salaries, maybe office lease, marketing expenses, whatnot. At that point, you got another 35 grand left over. I don't know what he would generally want to pay himself. And let's say that 15 grand wasn't inclusive of what you want to pay yourself, because most of the time, business owners don't count that in terms of like what their monthly overhead is. But let's say he pays himself 7 grand, or allocates 7 grand for, personal expenses and whatnot that he sucks out of the business. Then you got another $28,000. I would probably, if you've got 15,000 worth of monthly overhead, 6 months of cash reserves puts you in a really, really good spot.
Yep.
So I would try and get there as quickly as you can. And then at that point, you can reinvest as much, as you want back into the business if you have, the exact same type of month. But 6 months gives you time to like weather, you're going to have a couple months where like closings didn't work out or whatever, right? People bail on contracts, or maybe marketing's a little slower, or just there's all kinds of different factors, right? Or you need to kind of tweak where you're marketing or what you're going after, or anything along those lines. So I think the soonest that you can get 6 months of runway, not only personally, but for your business as well in the bank, then that frees you up to make these choices, and really it becomes a much easier choice at that point. But I'd be curious what you think.
Yeah, I think as I've thought about this, the way I answered this question, I'll put it this way, is that one, I think people build themselves, and the note I took while you're talking, people build themselves a prison if they're not taking profit out of the business. Because if you don't build in a layer of profitability, and you'd keep doing deals. That's my position. The first couple of years I was in my business in my office in Renton, and I was for the first 4 years paying myself no more than 4 or 5 grand a month. I was telling myself that I was reinvesting into the company. At 20, 21, 19, 18, 19, 20, that was enough to like pay my rent and move out of my parents' place. And like, but I was telling myself, I'm reinvesting in my business until we got to the point where we did $2.5 million in a year. And I still only had $4,000 or $5,000 I was paying myself, and not because I wanted to, it's because that's all that was left over. And I think building in a layer of profitability is a smart way to insulate yourself from building yourself a prison, because we're not really building companies with enterprise value. And the happiest people that I know that have been in real estate the longest, like they've taken a lot of chips off the table. And the way I heard it one time, which made a lot of sense to me, is like you can either have the regret of, hey, maybe I took a few too many chips off the table and they could have compounded more, or you can have the regret of, hey, I didn't take enough off the table and now I don't have as much as I would want. And I think it's smarter to be on the front side of that. This could have been larger. I could have done 4 deals instead of 2 this year. I could have done 10 deals instead of 8. But I think that's a better regret to have, the regret of what it could have been more versus, wow, this is a lot less than I wanted, and build your business around that. Because no one ever went, broke, the cliche term, no one ever went broke taking a profit. So that's kind of my take on that is, fund your living expenses, fund 6 months. And then if you want to get aggressive, go for it. But if you don't build in that box of profit that's at least there for you to take every month in your business, depending on what your goals are, then I think it gets really hard to build the kind of business that you want long-term, because you'll start to hate it.
Well, and I call it white knuckling. You're white knuckling through those harder times, and everybody's going to do it regardless of what we see on this podcast or what people hear elsewhere. But they may recognize those feelings sooner than later and kind of change their course. I mean, I know there's plenty of times in my business career where I definitely white knuckled it and probably did too much, or took on like another big project that I should have just said, you know what, we got enough going on, which is basically the same thing, right? If you're running a wholesaling business, you could say we've got enough lead flow, we're doing enough deals right now based on the cash flow and the cash that we have in the bank. Same thing happens on the other end when developers get over their skis, right? They're like, ooh, another deal. Ooh, look what I can make on that deal. All right, I'm going to lever up even more. I'm going to pull, more of my cash reserves. I'm going to do whatever I can do to try and get into that deal. And guilty of doing that over the years as well. Fortunately, a couple of markets saved me, out of some of those projects, but it didn't feel good to white knuckle for as long as I was, that's for sure. So on the back end of it, will we all do it? Sure. But I think the best way to kind of grow your business is kind of what we both talked about here, some, version, mixed version thereof. But yeah, the more cash runway you have, the better you're going to feel, the better you're going to operate your business, and the more clearer your decision making is going to be, right? And that's, at the end of the day, a lot of decisions are made. It's not really X's and O's, it's from the gut, right, in business. And so, you have to have a clear mind to make the best kind of gut decisions for your business, and that really helps, in my opinion.
Well, that kind of segues into the second question. And I, coming into this podcast episode, I wanted to kind of keep the theme financials, because we've been talking a lot about that. The second question is that I get a lot is in our community calls is people about planning long term and planning financially in the business they want to build. How have you thought about 1 year, 3 year, 5 year planning? And as an entrepreneur, like what do you think is a good financial model and as an entrepreneur to shoot for, in terms of a lot of people go, hey, if I want to build my real estate business towards retirement, like what does that look like? Because a lot of people that like we know, most agents, they just do deals, and they get to 75 years old or 72 years old. And yeah, they have a primary residence that they have some equity in, and they might have a second home, and they might have a nice car and a boat, all the things that, realtors and I think investors tend to go to buy. But how have you thought about setting yourself up? So if you want to stop doing deals, or you go through a spell where you don't do deals, like what would you tell someone that's 3 years into the business that is doing $1 million a year, low six figures, $200,000, $400,000 take home, about planning for that and thinking through that? Because I don't think enough people do think through that stuff as they do deals and do flips and do development deals. They just chase the next check. And as I think everyone realizes, money disappears pretty quick if you're not intentional about like making money in business and preserving wealth. I think are two very different skill sets.
Yeah, if you're stuck on like the forever transactional roller coaster of like that's how you know, earn all of your income is really from transactionally, you're just going to be you're going to be kind of that hamster on the wheel. And sometimes that wheel pays really well, but like once you stop running, what's there, right? And that's most people really in life. The beauty of real estate is that if you plan a little better, you don't have to be most people. And it's not like you're investing in an asset that you don't understand or you need to hire some sort of a, financial manager to, tell you what you need to invest in stock market wise and this and that, which, that's a whole nother conversation. But in terms of like, for me personally, for a large percentage of my career, I used, the world of content creation, online marketing, coaching as
Yep.
a secondary income stream. And so it really comes down to multiple streams of income, right? And that secondary income stream was a good income stream, and I thoroughly enjoyed it for the time that I did it. But then as I moved to Florida here, I realized that I could probably take a little bit of break from coaching and content creation and things like that, and just kind of work more solely on my real estate business. And when I did that, I took a number of rentals that I'd bought over the course of my career in the Pacific Northwest that really weren't paying me anything. I mean, it was really just debt service and covering incidentals and missing month of rent here and a new furnace there and a new roof and all that. It wasn't getting rich and it wasn't really paying any bills other than just sustaining these properties. But taking the equity that I'd created in those over the years and 1031 exchanging them for properties down here, and pairing it with some additional cash that I've saved in certain cases, so that some of the rental properties I have, most of them don't have any debt, and so I run those now as short-term rentals, and those short-term rentals spin off quite a bit of cash flow every month. So whether it be in the world of content creation, coaching, some sort of service that you can do in addition to your real estate business, or whether it be investing in rentals and creating over time a secondary income stream that's meaningful to your life, then that's the thing that gets you off that kind of transactional roller coaster, or gives you the opportunity to get off of it, right? And that's not to say that you would, because I'm not getting off the transactional roller coaster, but it gives you the opportunity to, and it just gives you allows you to sleep a little better at night, and you built this layer of secondary income that comes in every month. It's not like it's just this pile of cash that you're kind of chipping away at, and you're like, shit, how many years do I got left? How long can I, then that's your typical retiree, right?
Yeah.
And so I think both ways are great. I know a lot of people that make a lot of money online, and I know a lot of people that make a lot of money, in kind of passive real estate cash flow. And, I'd say the passive real estate cash flow route, it takes a little bit more time, but it's easier than, creating content and coaching, because that's a transactional hamster wheel as well. At a certain point, you'll get kind of tired of doing that also. But it's hard to walk away from it because it pays well for some guys so well. So I think ultimately the best version is kind of staying in the asset class that you know best, and that's real estate, and just kind of over time, you just acquire these rentals.
I think that the difference between passive income and recurring income, and I think the answer to this is that you have to create some kind of stream of recurring income beyond your active income to, I think, really set yourself up long term. And some people do that through, I follow this guy called the Decade Investor on Twitter, and he's just compounded over decades a stock portfolio where his dividends are 15 grand a month, right? So like, there's so many ways
too, right?
There's so many ways to go about it. But I think obviously you have the active capital part, and you have to get good at managing that and saving that and investing that. And I think if you can buy good assets in good areas that appreciate well, that you can break even on, you'll have the net worth piece that inflates year over year as home prices increase. But I think there's a lot of people who have net worth that are poor, broke, because as soon as they sell that house, then they're just spending that piggy bank that they have and living off of that. And so I think you have to find a way to create a recurring income stream. Like my father-in-law was in the financial business. He still, in the companies that he sold, the deals that he worked out, he still monthly gets checks, allowed him to live a great life through retirement. And yeah, he has his assets, he has his net worth, but a lot of them are through just, a lot of his living is through that recurring side. So that can be from a product, that can be from investing in stocks, investing in, there's high interest savings accounts that can pay you 5% right now. So Eventually at some point you have to create that recurring, and it's never going to be fully passive. Like even if you own a perfect rental, like you're still going to have to get on the phone and do some things sometimes. But I think for most people, if you can get to your number per month that you need, once you stop doing deals actively through some kind of recurring stream, whether it's rentals, whether it's business, whether it is, stocks, a high interest savings account, investing in syndications, whatever it may be, I think that's where you set yourself up well long term.
Yeah, and I think there's also differentiation, active, reoccurring, or passive and recurring. Like like I have a money market account that's a high interest bearing money market account, right? And it delivers every month X number of thousands of dollars just in interest, right? And it's like that's about as passive as it gets. Now,
Yep.
the reality is that the days are numbered on that being as appealing as it is, because as they lower the Fed funds rate, the return on that cash is going to get lower and lower. And so then you have to start looking at other options and other places to put it, right? But the other thing too is that a lot of us, when you're in real estate for a long time, like the beauty of real estate is you don't ever have to actually retire, because I think once you retire, you actually start dying pretty quick. Most people do anyway, right? And I just don't. It doesn't mean you got to work every day or 40 hours a week, but like you got to be engaged, right? And as soon as most people retire, they end up, most of them are fairly reclusive. They don't go very many places, and they just kind of, wither away. So the reason I like real estate is because you can still stay sort of engaged and active in things, like rentals, right? Running rentals, whatever it is, whether it be commercial, multifamily, or single family. I mean, all of them have different layers of management that you can use or put in or not. But it just keeps you engaged, and it keeps you kind of working in the asset class that you've, spent a lot of time to master. And you know it really well, which, and what kind of returns you're going to generate for yourself every year, what kind of cash flow you're going to create every month. And to me, that just gives a lot of peace of mind that, most people in life don't get. Now, obviously, if you're in the world of building businesses and selling them and things like that, like your father-in-law, then, that was his world. Those are his assets that he knows the best, right? So
Yep.
We're just talking real estate here. So that's why I'm kind of going that direction. But there's all kinds of ways you can do it, just depending on what you're kind of an expert in, we'll call it.
Yeah. Well, as normal, those kind of two questions dominated the show. But I think the theme today that you guys overall was, one, when you think about taking money out of your company, build a business around profitability if you can, so you don't build something that you grow to hate. And then two is, I think we both agreed in our own way, our own verbiage, that having your active income and some kind of recurring income with what you know best is a good way to set yourself up long term. So as all you guys, we only grow this show through word of mouth. You're telling your friends, and it's grown tremendously. We had our biggest week ever downloads last week, and that trend is continuing to go the right direction. So tell a friend, give us a review, reach out, let us know what you want to see on the show, if there's a new one you want to see on the show. And until next time, you're only one deal away.